China's Q1 GDP results today?
I think the number clearly is a little bit disappointing, below expectations, but you have to take it in the context of other data that we've seen. Clearly, the Chinese economy has picked up from where it was in the first half of last year, and even in the third quarter, it's picked up quite strongly in the fourth quarter. The momentum is ebbing a little bit, but our expectation is that China can continue to grow around the 7.5% to 8% level, certainly for the next quarter and maybe even a quarter after that. So I wouldn't get too disappointed about the data, even though the number was a little bit weaker than expected.
Will the growing mountain of debt overshadow China's recovery?
There's no doubt that a lot of the growth that we've seen in the last few years, really since the financial crisis, has been funded by a significant increase in debt load. And the debt continues to build. We saw the total social financing numbers come out last week, which were very strong, which again is an indication that credit growth is there. Our view is that at this point, Chinese overall debt, whether we look at private sector debt or government debt or in aggregate, is still a manageable issue. It hasn't really reached levels that would really cause us to be very concerned. But the trend and the trajectory of strong credit growth, it does give you some pause to worry. And I think the officials have acknowledged that. So our expectation is actually that the total social finance figures, the growth rate will start to ebb, and particularly they're targeting to close down some of these private wealth products, which have been the credit generator of recent time. So overall, debt is not yet a concern, but it's something that I think the authorities will try to preempt.
You're recommending investors not abandon Chinese equities, saying there is more upside than downside. Why is that?
Well, we think when we look at the valuation levels of Chinese equities today, to us, when we look at valuation metrics like price to earnings ratio, price to book, the market looks quite attractively valued, i.e., yes, there are concerns, there are potential problems and risks, but we think the valuations are factoring a lot of those concerns. On the positive side, if the authorities are really successful in gradually rebalancing the economy, bringing down the growth rate of credit growth, etc., then I think the market can re-rate somewhat because it is quite cheaply valued. So the key drivers that we see going forward is, one, we think there's a lot of, if you like, pessimism in the way the market is priced, and two, our outlook for growth, while we don't see an acceleration, we don't see really a significant slowdown either. So, we're going to have maybe around 10%, maybe a little bit less than that earnings growth, and we have a okay dividend yield, and the market is cheap. So, when you put that together, to us, it looks like the risks in China are for moderate upside than downside.
Gold has sunk more than 4%, breaking below $1,500 per ounce. How should investors position when it comes to gold and the rest of the commodities complex?
Yeah, I mean, gold has been on a downward trajectory for really quite a bit of time, and certainly Friday it was a big move, but it was part of that trend. And there's some technical factors on Friday with concerns about Cyprus potentially offloading some of its gold holdings to monetize some part of the economy. Our thinking is that what the gold price is really reflecting is the reality that the Fed will have to end QE3 at some point later this year or very early 2014. And so gold, it tends to be a leading indicator, and I think it's pointing down to the fact that this great monetization experiment that we've had in the US is going to be gradually, not at a fast pace, but will gradually be brought to an end. And I think gold is reflecting that. From here, with gold at 1,500, does it go back up? Probably not much. I mean, it can certainly bounce because it's a bit oversold in the short term. But our expectation is the trend for gold price from here on is maybe towards a little bit more softness rather than strength.